Hey, this is Jordan, and this is your precious metals video market update. This video is being recorded on the afternoon of Tuesday, August 9th, 2016. Thank you for joining me today. And in this video, we're going to talk about our medium term outlook within the context of where we are right now in this dramatic slash fantastic recovery we've had in precious metals since the bottom on January 19th of this year. Now, in this chart, we show a line chart. So it's a daily line chart for GDX on the top and GDXJ below with the 400-day moving average in both charts. And what we can see in both charts is that the miners are basically trading at or around 3-year highs. And the recent pullback that they had in July was a retest of the 2014 highs, which occurred in the first quarter and then early in the third quarter. You can see those arrows. It was kind of a bit of a double top there, and the market had a very big sell-off, which lasted about 18 months before it bottomed. And so the miners were able to rally above those at the end of June, and then in July they came back, successfully retested that breakout in the former 2014 resistance there. So where are the miners right now? Well, as I said, they're trading at or around new highs. So there's still some resistance they're trying to get through, but they basically have handled it. And we can see with GDX, which is trading just below 31, there's very limited resistance until it gets to the upper 30s to 40. I believe the 50% retracement of the entire bull market, or entire bear market, I should say, is at 38 or 39. Now, with respect to GDXJ, you have the same zone where resistance is really lacking. GDXJ closed just below 51 today, and there's a very thin zone of resistance until the upper 60s and 70. And so that resistance that we're looking at in the miners is basically the 2012 lows. We had that good rally in 2012, and then the bear market really began in earnest. And to get more historical perspective on where we are, this is GDM, which is the parent index of GDX. So this is index as if you're looking at GDX going back 20 plus years. And so we can see the resistance that the miners are trading slightly above right now, from about 800 to 810. GDM closed today at 854. And just look at how important that level has been over the last 20 years. That's a very critical level, and the miners have gotten above that. And so possibly they could correct a little bit and retest that resistance. That's now not out of the equation, and they can still be in very bullish territory with respect to the months ahead. But speaking of the months ahead in a potential upside target, we talked about 40 for GDX, and that is in the low 1100s for GDM. And you can see if we stretch the chart out 10 plus years, that target also is a very strong target with lots of resistance. And that target in the low 1100s, that is also around the 50% retracement of the bear market. And so these targets that I'm talking about, which you saw in the last slide, I'll show you there again. The high 30s to 40 for GDX, the high 60s to 70 for GDXJ. That can coincide with a move in gold, which we'll get to, up to around 1500. But taking a step back and looking at the short term for the miners, they rallied up and kind of made a new high, although they're kind of selling off a little bit. But either they're selling off here or they're correcting the strong rebound they had in July, or the end of July. What basically happened, the miners had a 2-month consolidation from May and June. It was an inverse head and shoulders consolidation continuation pattern. Those are very rare, but they do occur. and it was sloping upward, which tells you that the market is strong. So that was bullish. So the markets exploded out of that at the end of June. Then they retested that successfully at the end of July, and they had a really good bounce in late July. And so now they're kind of digesting, consolidating that bounce. And we drew some lines there. I mean, it wouldn't shock me if the miners corrected a little bit here. GDX uh, possibly to the low 29s, GDXJ possibly to 47. So I don't know what that is, 5-7%. I'm not predicting it's going to happen. Just pointing out if we see a sell-off in the next couple days, look for this area as support. It does look like a strong target. Now, moving on to gold, here's the weekly candle chart of gold, which it's finding some resistance around 1375, as you can see if you look at the last 5 or 6 weeks. And 1375-ish, that is the 38% retracement of the entire bear market. And of course, you have pretty stiff resistance there, slightly above that, around 1400. So, I mean, gold's had a heck of a move, and over the last 1, 2, 3, 4, 5 weeks or so, it's kind of digesting and consolidating the move up to 1375. I mean, it's still at 1346, has good support at 1310, strong support from 1280 to 1300. Like I said in the last slide, I mean, we could get a little correction here. There is a gap in gold, so it's possible it could come down and retest 1310 or even 1300. But the prognosis to me remains bullish. I mean, the gold it can't go up every week. It can't go straight up. I mean, it is going to have periods of decline and consolidation, even when it isn't a primary bull market, as it is. So we'll see what happens over the next week or two. But generally speaking, I do expect that gold eventually will trade above this 1375 to 1400 level. And in that case, it really has smooth sailing until 1500 to 1550. I do want to note the 50% retracement of the entire bear market is around 1480. So that would be the minimum upside target if we see gold break above 1375 to 1400. And as always, follow the stocks because we're still early in this new bull market. The stocks will lead, and I mean they're looking good. I mean they're trading around their recent highs while gold is trading off its recent high. I mean, that's a good sign that the miners are continuing to show strength. And so we remain bullish over the medium term, the next couple months. I still think that there's a good probability that we're going to see precious metals make another strong move higher, another breakout. And then after that move completes itself, that's when we could see the first sizable correction of this new bull market. And if you'd like to follow more of my work, go to thedailygold.com, sign up and get a lot of my free best research there. Everything I do, all my free materials posted there. Consider subscribing to my subscriber service. The cost is less than $1 a day, and I'd be happy to answer any more questions about what I do. And on that note, thank you everyone so much for tuning in. And I hope to speak with you again in the next week or two with another update. Thanks.